What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be talking about the Bitcoin price chart and the altcoin market briefly, as price action is pretty tame today, but the big event coming up is that today at 2 p.m. Eastern, 1 p.m. Central Time, 11 a.m. Pacific Standard Time, the Fed is expected to hike rates by 0.75 of a point or 75 basis points. You can see over here on CNBC, the Fed is expected to fire off another 0.75 point rate hike. It's third in a row. It will also release quarterly forecasts for inflation, the economy, and the future path of interest rates Wednesday at 2 p.m. Eastern. I saw this post over here on Twitter by Jonathan Farrow showing Fed decision day performances. And as we know, the previous days leading up to this, we've seen some negative price action. If we look at the last 4 Fed days, the day of the actual interest rate hike, we could see that prices actually went up in the stock market. You can see January was negative. However, we did not start raising interest rates there. We started right here. And so each time we've raised interest rates, the stock market has gone up. But what we also know is the day after can be volatile as well, with quite inconsistencies in there. You look to March, it still went up the next day, but then in May and June, big rollovers happened really fast, and in July, it still continued to go up. So for Bitcoin, the most recent interest rate hike day was back in here, in which prices popped up on Fed day and then continued up and then stalled out at the top of the range. But the thing to take note, obviously, is that this week, for the remainder of the week, probably going to expect that things will be volatile because it's been volatile every Fed week. The main thing, of course, for me that I'm looking at is to see that our current lows do continue to hold for Bitcoin. Our current price behavior is consistent with bottoms throughout history and also at key support levels. Should we take those out, it'd be much bigger problems. And the same goes for the US stock market. It is now getting closer to that 200-week moving average, getting closer to those lows again. With how deep the Dow Jones has pulled back in here, there's going to be a lot of concern regarding the price action moving back up. If we do end up getting a move back up in the Dow Jones at this point, with how deep we've pulled back in here, we're mimicking very similar behavior to what happens in ABC corrections. And so I'll move us over to a daily time frame, turn all that on. This is very consistent with how ABC corrections happen. If you hit the 618 retracement, pull back down below the 0.236 retracement level, and then turn your way back up to hit a C leg or a higher retracement level, that these things can roll over like this. And this is precisely what Bitcoin looked like in 2018. It's just like what Ethereum looked like in 2018, hitting the 618 retracement back below 236, then back up to the 702, and then lights out. Which you could see here for Bitcoin as it hit the 618, pulled back below the 236, back up to the 702, and then lights out. And as you can see here for Ethereum, hits the 618 retracement level, back below the 0.236, off to the 702, then lights out. So that'll be addressed another day should we see the market start to turn up. But it's something that I keep in the back of my mind in case something surprising does come out of this meeting. If the Fed starts saying, hey, we've already reached restrictive territory, that even if the Fed does pivot or change themselves, there would be concern if we got back up to these prices. That's for another day. But the most important thing today, of course, in this week is to see that we still do hold these levels right in here. I won't dive too deep into all of that, but we've been through it many, many times before. If you start taking out the February of 2020 high, and if you start taking out the 200-week moving average, this is not like the great financial crisis. This was ranging, failed range breakouts, broadening wedge. This is bubble. If you lose parabolic growth, you lose these higher highs, higher lows, these tops acting as support, we are no longer in bubble behavior if you move down like this. So my big worry for the stock market would occur if we do take out the February of 2020 high and if we take out the 200-week moving average. Right now, we've held them. Still to this point, with how deep we've gone, it's created massive concern if we do pull back up and go into a retracement. But boy, oh boy, this is the big spot to watch right now as we head into a volatile week. To kind of understand the context of what I'm thinking when I'm talking about using Ethereum as an example or Bitcoin as an example, we can sit here and I'll show you Ethereum right next to the Dow Jones. And as you can see with the Dow Jones, what do we have? We have our double tap back test on top of the all-time high, as we had over here with Ethereum after ranging for an extended period of time. Then what do? We have an aggressive breakout with an aggressive breakout followed by our violent V bottom back test on both the Dow Jones and Ethereum. And then off and away we go into a final leg, pushing us up to our top. Now, the thing here is that if we look at what happened with Ethereum, you see how there's an initial profit take. And I talk about initial profit takes a lot. Still a chance this is just the profit take, right? Because we haven't actually reached out to full extension over here on the Dow Jones yet. And Congress hasn't banned themselves from owning stocks just yet. If Congress banned themselves from owning stocks as we go back into a 702 retracement, that's as good of a narrative as you possibly need, as the Fed banned themselves from owning stocks back up here. But notice as the fall began, it did go back into an ABC 702 Fibonacci retracement in here. We have not gone as deep yet. Still a shot for this being initial profit taking with a new all-time high coming later. But at the same time, definitely still a concern that we have already peaked at this point. So if we go back into a retracement, certainly some concerns there. This, again, like a lot of people are hoping for, they're hoping for one more dip to be able to buy that. From a market structure perspective of how this is all played out, breaking the 200-week moving average, breaking the February of 2020 high would signify the bubble of the U.S. stock market has popped, which if history is any guide, that would mean 20 to 30 to 40 years of bear market in the Dow Jones Industrial Average. So we won't go down all of that doom talk, but that's just to show how important it is for the stock market to be able to hold where it's at. And fortunately, for the last 4 Fed rate hike meeting days, we have seen price action pop up. So hopefully we do end up having a good day today. But still, the story remains the same over here on Bitcoin. I know a lot of people are hoping that prices break down, that they can get, $12,000, $14,000 for Bitcoin. I put out a long video last Friday discussing why, if that happens, the structure of the market says that Bitcoin has no 4-year cycle this time. So, the thing is, let's hold here, okay? Like I mentioned earlier this week, I did buy the dip on Bitcoin. I do have a stop loss set if it does go and break into new lows, because this market will be different from all previous markets. And I think a lot of people are trying to use the past as a reference for what has happened here in the current price action of Bitcoin. But all the conditions of what has happened so far are consistent with the bottom already being in. If we go and break into a new low, it's inconsistent with how the past has actually behaved. So for that, I will be way more worried that the price action of Bitcoin mirrors that of what we were just looking at, Ethereum, and that a breakdown signifies way down to go. But should we hold the price levels that we're at right now, we're looking very consistent and similar to at least giving a chance to go back into retracements and potentially new all-time highs. But should you break down into new lows, all that's gone. So, dang it, blockchain backer, give me some optimism. This is scary stuff. Look, just pointing to the different places that are of concern, right? If we take out those lows, and I'm just kind of rehashing that over and over again, those lows are so important to hold in there. And absolutely nobody is willing to buy them. Everybody's wanting it to go lower. But I'm over here taking a stab at it. So we'll see how things go. I don't want to talk too much about too many things because the prices haven't changed too much. We just know that today is Fed Day. We know that volatility happens on Fed Day, it happens the day after, so it's probably for the rest of the week. The talking heads are going to go crazy after Jerome Powell speaks today, and we'll just kind of take it as it comes. I am still trying to get my final buy orders in here. If the market can give it to me below 18.3, I don't know if it's going to end up giving it to me. I may have to settle for a little bit higher than what I'm wanting to. But I'm putting my money where my mouth is. I see this as being the bottom, according to every bottom that we've ever had. And for that, I'm going to take a shot at it. But I wanted to point out, if we break into new lows, all bets are off. So let's get through today. Let's get a bounce out of here. Fed days typically have been good. Otherwise, expect some volatility to show up this week. We've already seen some this week, but the last 4 Fed weeks have shown volatility on the day of Fed day and the days after. So fingers crossed, it's positive volatility, right? But all right, guys, that's going to be it. I don't want to talk too much. It is what it is. We're waiting for the Fed to come out. We're waiting for volatility to happen. It always does. It'll be a volatile day. If any of the previous Fed days can give us any type of in history of what happened, it's volatile. So get ready for it. That happens today, 2 p.m. Eastern time. But all right, guys, that's going to be it for this one. I'll check in with you guys later. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.